Governor Frank Keating, you recently had an op-ed in the USA Today saying that the Dodd-Frank Act is not wholly writ and it needs to be changed. Why are you making this push now?
Well, Barney Frank, when I first came aboard the ABA 4 years ago, told me exactly that. He said, well, give me an example of some of the things that are bad in here that we ought to repeal or amend. I said, my twin brother is the CEO of a community bank. He is chairman of the utility board in Tulsa. The city of Tulsa has a small depository relationship with his bank. He would have to take a course by the SEC and have to be registered by the SEC to continue to be utility board chairman, so he was going to quit. That's an example of overreach. Today, Dodd-Frank has 11,000 pages of proposed and final rules. The average community bank has 35 employees. Who can read 11,000 pages of proposed and final rules? 5 years after the act was passed, it's time to reform it, make it work, don't repeal it, but at least take out those things that harm access to credit on the part of ordinary Americans.
Well, one tweak that you suggest is to allow mortgages to become qualified if they sit on a bank's balance sheet. Tell me why this is a good way to go.
Well, any bank that would make you a loan or me a loan, they would expect us to have a job, have assets, and have income. Now, if they intend to keep it on their books and have that income pay itself into the bank to pay the bank's expenses, as opposed to selling it to Fannie and Freddie, guess what? I think, human nature being human nature, that bank would be really focused on an excellent underwriting decision. So if it's on their books, it automatically ought to be a qualified mortgage.
And you also want to give banks a little bit more time with regard to their securitized assets on their books. Why the stalling for time?
Well, because what it would do, let's say you say it's 2 years, it would give an opportunity for an institution to unwind those trades, if you will, over a period of time and not instantly. Because what would happen if we did it instantly, all those legal, all those sanctioned trades would go down in value, considerably go down in value, which would not be healthy for the bank.
You mentioned some smaller banks before. Let's talk about the big banks right now. Jamie Dimon recently said that the banking industry is under assault by regulators. And for a lot of people on Main Street, it's tough to really understand what Jamie's saying when you look at what happened with the LIBOR, the LIBOR manipulation, as well as the currency manipulation at the big banks, and the tax evasion over at UBS, and recently at HSBC. So a lot of people are thinking maybe they need more regulations and the banks are deservedly under assault. What do you think?
Well, I think an institution like JPMorgan Chase, and I think Jamie Dimon is a very superb leader, an institution like JPMorgan Chase is in effect a small city. The number of employees that institution has are enormous. So if they need and have to tweak their administrative processes to make sure they background better if in fact some of their employees did inappropriate things, that's all good. I mean, there will always be in any large institution individuals who will disappoint you, but I think what the government has done is looked at the level of the losses occasioned by the collapse of '08. My view is it wasn't the banks. They did some silly things, some dumb, some petulant things. It was Fannie and Freddie that encouraged people to buy a home who did not have any assets, jobs, or income. They're the part, the government, that I would focus my attention on.
All right. Thanks a lot, Governor Keating.
My pleasure. Thanks, Greg. Appreciate it.
Thank you for watching The Street.